First, thank you everybody in the audience. Thank you for your work on carbon storage. It's really important. This is my first visit to this meeting, and it sounds like everything I've heard has been very important and very respectful of the deep knowledge and experience of the last 20 years. And also, thank you, Carrie, for getting me involved. I'm happy to, you all know that I'm based in Texas, and we have a lot of uncertainty going on, and it adds a little flavor to what we're talking about. But I'm very happy to have been invited to join you here in Europe. Thank you. Um, my presentation topic is much more constrained. It's not, the audience is not the public. The audience is insurance. And insurance is one small piece of what Jan Erik just talked about. So we're really ratcheting down from vision to what it takes to run a commercial project to how do you get Jan Erik's money, right? And my assumption, well, again, it's not a very interesting topic, but it's important, right? And my assumption in preparing these statements and coming to share my experience with you guys is that um, a lot of you will be put in the role that I've been playing for the last year or two, and that is as a geologist, trying to translate the risks, the geological risks, and some of the engineering risks inherent in a specific project, in a specific storage project, to an insurance industry that's very interested in this subject, right? Because it's got a lot of money tied up into it. And then Jan Erik bubbled up. This is about money, and insurance wants to make a profit, and they've envisioned and they've listened to the story about carbon storage, and they realize that if it scales, it's a big deal, and they want to be involved. And we'll talk a little bit more about different parts of the insurance business and how they're involved, et cetera. But so it's kind of a talk about micro getting something done. But I think that many of you will be put in that position of trying to translate your research, your project specifics, et cetera, to a financial group. So I want to ask a question before I get started, and that is, who in this room has yet to talk to insurance, either to communicate something about a project or to try to even get insurance for your project? Show of hands. Excellent. More than I thought. Okay. So we may have a better dialogue. I kind of expected nothing, but that's very good. So I'm going to set the stage with a few slides, share some experience, and then offer some points for discussion. And I'll try to be as brief as possible because we want to close up, have plenty of time for discussion, but also get to dinner. Next slide. Okay. There's a lot of work in the pipeline, right? In the US, as of May 8th, there were 58 projects waiting to get a Class 6 license. That's 170 wells. Only 10 projects have been permitted so far. It's a huge backlog. That may get broken loose if the EPA delegates the authority to the states, to the 50 different states, to issue licenses. But right now, everything's on hold, just because of uncertainty. The IEA just published a database that showed at least 80 projects globally that are edging towards commercial. So many of the projects that you guys have been working on for years are edging towards operational. When you get to operational, focus turns to money, right? How's this gonna work? Bankability for a CO₂ storage project has a lot of elements. Jan Erik identified them. Two of them that are relevant to us as geologists to explain the risk and move forward with an insurance sword state integrity, and risk management. The other ones are really not in our department, but these two are. So what's the role of insurance? It's just like the insurance on your car or your home. It's to cover the risks, and it gives the investors and the project owners uh, confidence that the project can survive an insurable event. And there are different kinds of risks and different kinds of insurance. Um, the insurance industry is very comfortable with most of the risks associated with a geological storage project because of 100 years of experience financing and insuring the upstream oil and gas business. It's very similar. What they don't know a lot about, and they don't have what's called a loss history around, is the risk of leakage, more migration or movement. We'll talk more about leakage. I know it's a loaded term, but it's the term that defines the scope of work when they say, tell us about this project and what do we need to understand about this permit application in order to write a good policy that will keep us safe, will meet the needs of the project, and will make us money, right? So risks to human health and the environment can be covered. Risks to carbon credits and project financials need to be covered, and there are insurance policies that are evolving to cover the loss of carbon credits or the loss of tax credits. And then insurance, I don't know that much about this, but for financial assurance requirements to get a permit to move forward, um, there are insurance options besides a surety bond or an escrow fund or something where you just take your money and set it aside and say, this will cover everything. There are insurance products that are being developed that might cover some of that risk. This was a real learning of mine over the last 2 years, and that the roles and process in getting insurance, the insurance business is gigantic, and they've segmented themselves in different ways. But two key elements of an insurance process is between a broker and a carrier or an underwriter. Broker faces the client. The broker develops listens to the project owner's risks, frames up a strategy to cover those risks, and then goes to a carrier to say, will you please offer me a policy to cover these risks? And the broker will go to several carriers and explain the story to these different carriers, and the carriers will go back into their back room, run their analysis, and come back with policy offers, or they won't. Sometimes they won't do it. But then the broker takes these options back to the project developer or the project owner and says, these are the options, these are the one, this is one we think best, etc. The broker makes a fee off this deal. The carrier and the underwriter make money by setting the right price for the policy and then watching it as that policy develops and handles claims. If there are claims, if there are problems that they insured against, then they manage that claim and then they pay out that claim. So there's really two different functions in the insurance business. Some giant insurance companies have different divisions that do this, but they're supposed to be separate. The broker, and it's very interesting. Brokers have made quite a lot of aspirational statements, and I'll give you guys a link to a place where you can go and see these different aspirational statements. Hey, we can do this. We want to do this. We understand your risk, etc. Carriers, and I've worked primarily for the carriers. I've only worked for the carriers. They're not as aspirational. They're like, what the heck is going on here? And do we want to do this? Unfortunately, these are some of the risks that have been identified by Willis, WTW, a broker, very important major broker. Really interesting. Some of them we recognize. Asphyxiation risk. there is a risk of asphyxiation, right? It's happened. But not all of these, this is where really expertise and knowledge about a specific project. Uh, no, I'm
You
good.
have it
I'm
taken,
good.
you
No,
did.
I'd rather point.
The top
Um,
button if you want to point.
okay, thanks. Anyway, some of the risks need explaining. Some of them are not really risks. Some of them are very important risks. But what I found is that the insurance industry doesn't necessarily understand all the geological subtleties of storage. Some do. Reservoir engineers who have moved into the business understand that pressurized supercritical CO2 flows through the pore network and not filling up a gigantic cavern. But if you, when you read these broker statements, you'll catch these things. Like they think that CO2 is stored in a giant salt cavern. Very interesting. Um, Types of insurance for upstream operations. These are standard insurance policies. These two that I put into a box are the ones that really you focus on for getting storage insurance. Okay, here's my experience, and this is what I'd like to share with you guys. Um, like I said, the brokers are making the statements, the carriers are doing the work. It's the carriers that are likely to ask for help in assessing a specific project risks. Not kind of big statements about what's going on in the EU or what's geologically possible or what's going on in the United States. They want to know, we want to write a policy around the risks for this specific project. And every single assignment that I've done, last year I did about 6 or 7 assignments in these different states, and I looked at the HyNet project in the North Sea. The carrier was simply focused on what are the risks associated with leakage. Leakage is the one thing that we don't understand. We don't have, okay, a little bit more about leakage. It's a messy term, right? It can be, we talk about migration, we talk about leakage, but leakage is defined in different regulatory schemes differently. A leak in the North Sea, UK North Sea, is not going to qualify as an event in the United States. It will. CO2 migrating out of a storage complex in the UK North Sea, migrating out is not a leak. But the way the policies are written in certain states in the United States, that would qualify as a leak. And the insurance people are very interested in defining what a leak is and what the implications of a leak are. So there's a lot of gray area right now generally around this term, and I think that we need to be very careful that leakage doesn't get used in a sloppy way, and that if we can constrain the language around and define what leakage really means, like how bad is bad, and there's the presentations to date here indicate a very sophisticated understanding of leakage and what that leakage happens, but it's time. Got it. I was going to show some examples from an example of Wyoming. I'm just going to tell you what's going on here. Um, Wyoming has primacy. They will issue a permit for a storage permit. They've actually published what they consider the risks, and these are all these risks, which I don't expect you to see, can be summarized in 2 packages. The top risks are about risks to project costs based on CO2 migration offsite. And the other risk items are related to potential release of CO2 from the storage to the surface. And it's all about leakage, and that's what they're interested in. And while we're here for the next couple of days, I've got plenty of specific experience. If you're interested, we'll have a discussion about specifics. I just wanted to mention 2 really important terms: loss history, and then how each risk is evaluated in terms of frequency and consequence. I think loss history is really an important idea. Loss history means when an insurance company looks at a risk, well, let me come back to your car insurance. You apply for car insurance, they know what kind of driver you are and they know where you live, and they've got a 50-year record of how accidents and how claims are paid out, right? So they can analyze that and get you an exact premium for the risks that you make, and it's quick and completely comfortable to the insurance business. There is no loss history for carbon storage yet. There are use cases where we've documented leakage, but that hasn't translated into a loss. I'm not aware of any claim that's yet been paid for a leakage event by the insurance industry. And until we translate case use histories into the language of loss history, we may be struggling to convince, well, the insurance industry will be uncomfortable and probably overpricing their insurance, right? So where do we, and frequency and consequence, every risk has a frequency and a consequence. How often does this happen and what are the consequences? Big risks, generally low frequency, high consequence. Little risks, lots, and leakage would fit into both, right? An eruption and a asphyxiation event, which is very, very unlikely, would be low frequency, high consequence. And gradual leakage of 1% of the storage volume would be low consequence, high frequency. So some language to work with there. So in the absence of loss history, they're looking to us, geologists and technical people, to translate modeling, lab work, simulation, natural analogs, bow tie assessments, risk assessments on a very project-specific level. So here's some of the things that that I've come across in my review, and when I say my review, I'm not generating data. Data is coming to the insurance carrier. The carrier is pushing it across the table and say, what does this mean? So there's a limited data set, but here are some of the issues related to leakage that have come up in the work. Data quality, is the area known or new? And that's, are we in a depleted oil field or are you in a fresh aquifer? In terms of geologic and reservoir suitability, capacity through time, is this changing, right? Through injectivity, fault and fractures, really fascinating technical review of risks and leakage associated or migration associated with faults and fractures on day one. Cap rock stress, seismic activity, natural seismic and induced seismic activity, pressure plumes, really important emerging issue. How much capacity does the reservoir really have, not just on pore space, but on terms of pressure modeling and plume overlaps. I've run into at least one case where projects that were not even known to each other, when they applied to the permitting agency, was determined that the pressure plumes would overlap. And it was the regulator that brought that back to the table and brought the parties together to sort that out. Obviously, it's not a geological issue, but legacy wells and monitoring wells are much more risky issues for insurance than geologic risks. And then monitoring, sometimes, will the monitoring plan actually reveal a leak or a insurable event, right? And the very project specific. Last year, I presented a little paper for the IEA GHG entitled Insurance Coverage for CO₂ Projects. If you want information on brokers and carriers and links to their kind of statements about what they're doing, there's a table in this paper where you can click and the live links. And that's it. Thank you.